US weekly jobless claims fall modestly, housing begins hit 13-month low. Washington. The range of Americans filing new claims for unemployment advantages fell much less than anticipated closing week, suggesting a few cooling within the labor market, even though conditions remain tight. The economy's outlook is darkening, with other information on Thursday showing homebuilding slumping to a 13-month low in May, weighed down with the aid of soaring loan prices and constructing cloth prices. Manufacturing also appears to be dropping speed. The economic system's waning momentum comes as the Federal Reserve is aggressively elevating interest prices to combat inflation. The contemporary batch of financial facts accompanied at the heels of news this week of a marvel decline in retail sales closing month, and could enlarge fears of a recession. The Fed on Wednesday raised its coverage interest rate through 0.75 percentage point, the biggest hike in view that 1994. The threat of a hard landing for the U.S. economic system has grown exponentially, said Christopher Rupke, leader economist at FWD-BONDES in New York. The Fed's aggressive and abrupt policy tightening can also quickly be criticized for letting inside the winds of recession. Initial claims for nation unemployment blessings slipped 3,000 to a seasonally adjusted 229,000 for the week ended June 11. Economists polled by means of had forecast 215,000 programs for the latest week. The decline partly reversed the earlier week's jump, which had lifted filings close to a 5-month excessive, and changed into blamed on seasonal fluctuations around moving holidays like Memorial Day. Significant increases in claims have been mentioned in California, Ohio, Illinois and Michigan. Claims fell in Missouri. There has been a regular upward push in reports of activity cuts in most cases within the era and housing sectors. Still, claims have remained locked in a good range in view that plunging to a extra than a 53-year low of 166,000 in March. Fed Chair Jerome Powell told reporters on Wednesday that the exertions marketplace has remained extraordinarily tight, and that labor demand may be very robust. The U.S. important bank has expanded the in a single-day fee by way of 150 foundation factors due to the fact March. For now, supply and call for mismatches will maintain filings low, said Rabila Faruqi, leader U.S. economist at High Frequency Economics in White Plains, New York. But the level may want to begin to trend up because the Fed maintains to get rid of policy lodging to gradual demand. U.S. stocks opened sharply decrease. The dollar fell in opposition to a basket of currencies. FRX, U.S. Treasury yields rose. U.S. labor market tight. The claims record confirmed the variety of people receiving advantages after an preliminary week of aid elevated 3,000 to at least 1.312 million all through the week finishing June 4. There have been 11.4 million activity openings at the stop of April. Higher borrowing prices are combining with report excessive domestic fees to kick back the housing marketplace. This may want to assist to deliver housing demand and deliver again into alignment and decrease fees. A separate report from the Commerce Department on Thursday showed housing starts plunged 14.4% to a seasonally adjusted annual fee of 1.549 million gadgets final month, the lowest stage on account that April 2021. Economists had forecast starts could slide to a fee of 1.701 million units. Permits for Destiny Homebuilding declined 7.0% to a charge of 1.695 million gadgets. A survey on Wednesday confirmed the National Association of Home Builders Wells Fargo Housing Market Sentiment Index hit a 2-year low in June, with a gauge of prospective client traffic falling under the break-even degree of 50 for the first time on the grounds that June 2020. Single-family housing starts, which account for the most important proportion of homebuilding, tumbled 9.2% to a rate of 1.051 million devices remaining month, the bottom when you consider that August 2020 Single-family homebuilding rose within the Northeast, but fell inside the Midwest, South and West regions. The 30-year fixed-rate loan jumped 25 basis factors, remaining weak to an average of 5.65%, the highest degree due to the fact November 2008, in step with data from the Mortgage Bankers Association. Building permits for single-family houses declined 5% to a charge of 1.048 million gadgets, the lowest when you consider that July 2020. Starts for housing projects with 5 gadgets or greater dived 26.8% to a rate 469,000 devices. Multifamily housing allows dropped 10.0% to a fee of 592,000 units. The variety of houses accepted for production which might be yet to be commenced extended 0.7% to 283,000 devices. The single-family housing backlog turned into unchanged at 152,000.